Hello, guys, and welcome to another post market analysis of Bank Nifty. Today is October 31st of 2023, and this is Bank Nifty's price action in a time frame of 5 minutes. So we are towards the closing. There is still 3.5 minutes left, but that's okay. We'll go ahead and see what's there in today's price action. Okay, I'm just removing all these indicators out, and let's concentrate on pure price action. But before we do that, let's get into a daily chat as usual and then start from there. Okay, so now you can see that after this double top breakout from the top on a daily time frame, you can see that this double top breakout from the top. Okay, so market in yesterday's video we were discussing that it is just a counter move because your major trend is still the downtrend. So even in spite of the green candle that has formed yesterday, this last one that you are seeing is today's candle. So in spite of this big move, here you are seeing couple of green candles, and we said that it is just a counter move in a major downtrend. So that can be seen even in volume. Let's get volume. Sorry. Yeah, even that can be seen in volume as well. See, these two green candles here, the volume is rising as the prices are going down, as the bank nifty is going down. But you see, for these two candles, the volume is decreasing. So that means in a major trend, whenever you see a counter move, this is as usual. This is very common that you see a less volume on the counter trend. That is what happened. And today, in spite of a gap up opening, market has seen a very bearish move uh, in today's price action. Okay, so now let's go and dissect the bank nifty's 5 minutes chart. All right, I'm just taking the volume off again. Okay, so let me enlarge this. Yeah, so still there is 1.5 minute left for the market uh, close, but that's okay. We'll go ahead and see. So today market has opened at this level, that is 43,200 and change level, and from there it has continuously seen the bearish momentum. It has from there you have continuously seen the bearish momentum, and from here this is the place where it got a first rejection, and then seen some sort of bounce back from there, and then again prices have moved down. but but let's first deal with this reaction low. Because of this moment, because of this reaction, and also this is a bullish engulfing pattern. Okay, it is safe to assume that this is a good support level. Okay, that was a good support level, and again from there prices have again started to fall back, come down. So this can also be taken as a resistance, an intraday support and resistance levels. So this is what the market has created. We were able to draw it before 10 o'clock. So we got this support area from this swing low reaction, and from this swing high reaction we have seen that this is a resistance area. So apart from that, see, we can see that there is a higher, this was also a reaction. So from there we can see a very clear trend of, see, there was two couple of swing lows, and from there market has come down. So initially at around 10:30 stages, you know that the market is not so strong irrespective of this green candle. This is the only big green candle. Okay, so what happened after that is, see, around 10:45 candle, you have seen a breakout close beneath this support area, and you have also seen the confirmation candle right there. Okay, so from that place your initial rejection, a minor rejection was there, so that can be your first level, and this was another reaction, this can be your second level. By keeping your stop losses about this, if you have to take a trade there. But in this case what has happened is market has gone back and tried to close above this position. Sorry. So if, sorry, excuse me. Okay, so if this was your an entry because of this price breakout of this support area, okay, that was your proper entry. But what happened? Your prices, that was your stop loss, and your risk versus reward risk should also always be at 1 is to 1 level. In that case it was not 1 is to 1, and in this case it was 1 is to 1. Okay, so it was a kind of a tricky situation, but okay, that's okay. But let's assume that we were taken a trade there, that was a genuine stop loss, it is fine. So this was a stop loss of about how many points? 51 points in Bank Nifty. Okay, but let's see what has happened after that. After this green candle's closure there, okay, there was this green candle that has closed above this area, but from there again it has formed a very big red candle, making it a a bearish engulfing pattern. These two candles right there uh, are forming a bearish engulfing pattern, a, which is a bearish sign. But you cannot enter there because of your risk versus reward ratio. See what would have happened if you are that's your short position we're talking about. If you are entering there after this candle, see, your risk was so big and your target would have been only this. Your target would have been only that. Okay, so it is not even 1 is to 1. It is not, you are, if you are losing 1 rupee and you are gaining only 48 paisa, so that was not a good trade. But what can we do after this when your prices are still there? What can you do with this is you would have modified your zone, because this was your resistance and that was your engulfing pattern. You could have modified that and then waited for your next price action at this area. So in here, what has happened after this bearish engulfing pattern, prices again have gone into this support area, or this time it is a resistance because we are coming from the bottom. So here prices have failed to close above this and again formed a bearish a red candle, bear candle there. And after that, a couple of candles have seen some sideways momentum, after which this is the place where you had a chance, because this is again a bearish engulfing pattern. So in all our videos, we always say that you need multiple factors to get into a trade. So in this case, let's see what are those multiple factors. First thing is, this is a bearish engulfing pattern, and second thing is it is coming at this resistance area, and your third reason is you have a, a very large bearish engulfing pattern some time ago at the same area. And this time your next reason to get into this trade is your next reason to get into the trade is your risk versus reward ratio. Your risk would have been just above that, okay, and your reward would have been this line what we have drawn. So this, in this case, this is 1 is to 1. All right. So whereas here this breakout is, we don't have multiple reasons there to for an entry. This is just a breakout. Of course you have a follow through, but your second follow through candle is a doji candle there. This is a doji candle there. Okay, so those who know the rules of doji knows that doji candle cannot put halt to a downtrend. Okay, so this is a doji candle, but you don't have much of reasons here. But here it's a different scenario. But this time let's also see if volume has got something to do. Yes, of course. Okay, you see a very clear, okay, sorry for that. Okay, so here you see, in this case you have a decreasing volume. You have a decreasing volume there. In this case where you have seen this breakout, you have a decreasing volume there. That is why we always ask to wait for more than three confirmations to get into a trade. So in this case, this was a breakout only. This was a proper breakout only. So after breakout, you cannot, even though this was a breakout, so at support area, you don't have more reasons to enter into that trade. So that is why I wanted to show you the comparison between this. That is why I've written this. But those of you who have taken all these steps would have get saved by the markets without stop loss. So in this case, we don't have more than three reasons to enter it. So we will assume that the trade was not taken. Also, you have a negative signal there where your volume is decreasing. Unlike here, see how many reasons you have. You have a bearish engulfing pattern. You have a resistance area which is coming from your previous price action, and you also have a major bearish engulfing pattern there. Okay, here for this bearish engulfing pattern to consider, there was also some sort of price action that is coming from there. Okay, this price action, because you need some price action, you need a previous trend before the bearish engulfing pattern. So here in this case you have this bearish engulfing pattern, you have this resistance area, you have the previous engulfing pattern, three reasons there, and also you have an increasing volume, you have an increasing volume here between these two bars. If you notice, if you notice these two bars, you have an increasing volume there, that which is higher than this green bar. If you can see, I'll put a horizontal line there, so you see, so this particular bar, okay, the second bar after your candle, that is showing that it has got a higher volume towards the downside. Okay, so all these factors would give you confidence that you can take a trade towards the downside. So in this case it is 64 points. Okay, so let's assume this has only 15 points, because let's assume that if you would have taken the previous trade also, that was 50 points, and this is only 51 points in this case. Okay, so after that, what has happened after that, when you are here at this stage around 12:15 and 12:30, you are seeing a good reaction from there too. So you would draw a support area there. You would draw a support area there. Now I'm taking this blue line away. Okay. So now what I'll do is I'll just drag this towards the right side, so that we can we can rely on this important resistance area. So what has happened after here, even though this is a bearish engulfing pattern, we have a reason which is a bullish sign. We couldn't, we cannot take a call there, because you are seeing a low volume there on the green bar. Okay, so even without volume, this was not happening in a very important level, because yesterday's level was this. So it has shown some kind of breakout, but those who have maintained yesterday's levels, okay, that would be your yesterday's support area. So if you notice there, okay, this was a breakout from yesterday's area, and then it was a breakout failure, and then you have a new engulfing pattern, but on a low volume. So it is not a very good a trade. Even though you have a couple of confirmations, it is not good enough for us to get into a bullish trade, but that's okay. You can wait for the price action until it meets all your. So this was a successful trade of 15 points, that is net 15 points, not just 15 points from this trade. Okay, from here prices have again gone into this level. Okay, here you see this rejection, here you see this rejection. This rejection says that it market tried to go above this resistance area but failed to close beyond that, and formed a candle formation called a shooting star. This is a shooting star candle, but again it is coming at your a very important resistance area. But it's those who are because you see the kind of, if you want to take a trade, and it is also a harami pattern, because your previous candle's real body is very large, and this candle's real body is within the previous candle's real body. It is also a harami pattern. So you have two reasons there. One is the shooting star, and the second one is this is a harami pattern. And you have a third reason, that is it is coming at your resistance area. But the main concern here is what should be your target. In this case your target would have been that, because that is where the prices are seeing a very sharp reaction. So in this case, you, the last point that you need to always confirm before taking a trade is your risk versus reward ratio. So if you want to enter there after this candle to into this candle's closure, okay, you would always see your that's your risk, and your reward would be that. Okay, your risk versus reward ratio is more than one. That means that you can safely take this trade. But what has happened here is this particular candle has come very close to the to our target line, but it didn't touch our target line right there. But sometimes you cannot be so greedy, but it's okay. Okay, you can, you would have taken that trade, at least if not loss. Okay, you would have got your, when your prices are almost, because your trade is showing 1 is to 1 point. Okay, here, okay, yeah, there your trade was, your risk versus reward ratio in this case is 1.42. Okay, so our general standard rule is whenever your prices reach your first target, that is 1 is to 1, then we would always ask you to raise your stop loss to cost. So in this case, let's assume that you have not taken you are not exited from this trade because it has not touched your target line. That's okay. Even in that case, you would have not been in loss because risk your your risk would have been zero because your cost to cost, because of your cost stop loss is at cost to cost. So here we have all the valid points. We have three reasons to enter, and you have a target area which is giving you a 1:1 risk reward ratio. But in this case, we did not touch our target because it is at this level. But your targets have you have reached 1:1 risk reward ratio. That is when you would have raised your stop loss to cost. Okay, after this, okay, I know this is taking a bit longer, but it's very important for you to dissect and understand every move of your price action. Okay, so here after that we'll keep this line as it is. After that, what has happened is prices have gone and closed there. Prices have gone and closed there above this area, but have failed to close, but have failed because this is not a proper breakout, because you're not seeing any proper, you're not seeing any proper confirmation candle there. You're not seeing any confirmation candle there. So I'm just taking all this off, and again, let's look for reasons to get into this trade. Okay, the very first reason is you have a failed breakout there, and your second reason is you have a bearish engulfing pattern there, and the third reason is you have your resistance area there. Okay, and your fourth reason is the previous price action at this, exactly at that point, has given you a shooting star. So there are multiple points there. If you want, always you can take help of volume and see what has happened with the volume. So in, if you notice there, it was not so great on volume, it was not so great on volume, but you do have one, two, three, four reasons to entry. If that is meeting your risk versus reward, then it is a good trade to enter. So if your risk, sorry, so if your risk is 1:1, then that means you can enter, because this is very high. Okay, your risk is very high, you cannot keep that much of big risk on bank nifty. So your risk would have been at least above this to this candle's real body's top, the red candle of your bearish engulfing pattern. Okay, so there you would have been taken, there you would have entered, and then this would have been your target. Your target is same as before. So here your risk versus reward ratio is 1:1. And as per our rules, we always say that whenever your price is at 1:1, your stop loss would be at your cost to cost, and then wait for the prices to go and reach your next target. So after this price action, okay, the major support that the market has taken last time is this line, which is this. That means it has very well taken that. So those of you who wanted to take larger risk can keep your risk above that level, because you see this particular candle there tried to come out of this but didn't get any close. So this whipsaws doesn't matter, a close above this is a matter. But anyways, we wanted to keep at least to the minimum stop loss. Whenever you see a bearish engulfing pattern, is always to the top of that. If not, if it is very high, at least to the real body's height, that is this line right there. Hope you have understood the point here. So in this case today, forget about this, forget about the price that has gone beyond the support area, but your target was only till there. Okay, so in this case it was 144 points, and previously we have 15 points. So both put together we have 60 points of a bank nifty movement, which is really good. Okay, so thanks for watching the whole video. Be patient, and please stay tuned to our channel so that we will understand more of the price action after the post markets. And also we are coming up with a new series of pre-market analysis video as well. And if you like the video, please give it a like, and please do subscribe for more such valuable case studies on bank nifty.